What's going on, YouTube? Futures Brizio here. It is about 10 minutes to 5 on Sunday, July 19th. Hope everybody's doing well. And just hanging out here on this Sunday afternoon. I'm going to attempt again to have do live stream. Actually did one a little earlier, and I ended up deleting it because I had to quickly leave the stream and I couldn't pause it. So anyway, so I just deleted it. Plus, I'm still getting used to how to manage all this. I'm using Yard Stream, which, like I said, I don't have any affiliation with. It was just the one I ended up picking. Some things I'm still trying to figure out how to do on here, but yeah, I'm just still playing around here. Yeah, that's not anything there. I don't know what this does. No, that's fine. All right, so I'm looking over at my other computer here, and looks like it's okay. The couple of things I'm trying to figure out is A, how to move my mug here in the left corner over to a different side of the screen, which I can't figure out how to do. And also, there's a lot of wasted space here, and I don't know why it doesn't just fill the screen here. But anyways, it is what it is. So if you are joining the stream, make sure you say hello. Let me know where you're chatting in from or watching from. Appreciate it. And so, no particular agenda with this stream. I'm going to go through some charts here. I did make a recorded video yesterday, just kind of looking ahead for this coming week about at least some Forex pairs that I'll be watching out for. I've got, let's see, about 10 or so on my list. And when I say they're on my watch list, doesn't mean there's a pending trade. It just means I'm watching them. So it just means maybe something will show up. Maybe there's something interesting on the chart. I don't know. And so that's what I will be doing. All right. So we'll look through a couple of those now. And we'll see what we got here. So currently right now, and I don't think I can switch it. I have two open trades right now. I'm in Euro Canadian short, which I've been in for a few days now. And I'm in Aussie yen also short. The Aussie yen short is, I will most likely be exiting that trade this evening. The market's going to open in about 7 minutes. Now, I don't generally open or close any trades right at open because, as you guys probably know, when the Forex market opens and during changeover from New York to Asia, there's very, very large spreads that can build, and it's a terrible time to open or close a trade. Okay. So, but I'll show you both of those anyways. So we'll start with that. So first, let's look at Euro Canadian. And again, guys, what we're looking at here are not regular candlestick charts. These are range charts. Okay. And again, a range, I've made several videos on this, so I hate to always rehash, but in case somebody's just tuning in, hasn't watched the last 3 or 4 videos I've made, I'm sorry, guys, I'm eating here. Not a good thing. I will stop eating. Range charts are basically price-driven charts and not time-driven, okay? So they kind of look like regular candlesticks. But on a range chart, you get these range intervals you can set, and you can see right up here, 500R, all right? And that just means 500 ranges. On Forex, a 500 range chart means each one of these candles is 50 pips, okay? So you have to move the decimal point over one spot. Okay, so every candle you see here is 50 pips. They're all the same, whether they're red or green, whether they got wicks, whether they're dojis, whether they're engulfing, doesn't matter. Okay, 50 pips each. Okay, and so regardless of how long it takes for that to happen, they're 50 pips each. So you could get a candle paint and then not get another one for like 2 days, right? Because it's not going to paint another one until the price moves at least 50 pips. Now, of course, you can shorten or lengthen that range. And the other thing is, these are not time-based charts, but if you wanted to kind of sync it up and like, let's say you only like to look at the daily chart, right? You only like to look at your charts once or twice a day. If you got an open position, once or twice a day, that's it. You don't want to sit there day trading and scalping and having to constantly be in front of the charts. Well, you can change the interval to almost match up, at least in general flow, looking at just overall flow of the market, swing highs, swing lows, like not the individual detail within any range, consolidation area or anything, but just the overall look of the chart. And a 500 period or 500 range is about equal to a daily chart on Forex. And you go down to like a 200 or 250, um, is equal to anywhere from like say a 1, 2, 3, maybe closer to 4 hour chart. And if you go down to like 100, now you're looking at like about the equivalent of a 30-minute chart and so on. So you get the point. So if you are someone that likes to scalp or day trade, you just adjust your interval size down to whatever it looks like. And the way I do it to kind of line that up is I put two charts next to each other. I put the candlestick chart, and in TradingView, it's nice because you can have multiple charts side by side like this. The one on the right here is not a candlestick chart. It is still a range chart, just a shorter interval. But you can like throw a candlestick chart on the right or the left or up or above or below, whatever. And you can like set it to your preferred time frame. And then you can just play around with the intervals on the range chart to at least make it look similar so that if you're not the type of person that's going to be jumping in and out of trades all day and you don't want to be in front of charts all day, then you raise your interval. If you are more of a day trader or a scalper, then you want to drastically shorten that. Okay. And remember for Forex, whatever this number here is, you have to divide by 10, and that's how many pips each one of these candles is, right? So if you're a scalper, you're not going to be using 50 pips candles, right? That doesn't make any sense. If you're a scalper, you want like 1 or 2 pip candles. So you would change this down to like, maybe say 10 or 20, right? And that's going to give you a much faster chart, but still give you all the benefits of range charts, which is, to my opinion, clearer market structure, clearer consolidation zones, and price it won't draw a new candle until price hits whatever your pre-selected interval is. Okay. So that's the difference between range charts and candlestick charts. And that's a really important distinction. So, okay. So in TradingView, this is what it looks like right here. This little R says range. And I don't know if you can get these if you have free TradingView. I don't know. I have the premium, but I know if you have one of the paid versions, I know you can get it, but I don't know if it's available for free TradingView users. If one of you out there is a free TradingView user, you could let me know in the comments whether you can get range charts without a paid version. Okay. But I do have a paid version, so I can see it as one of the chart types. All right. And basically how you do this to change it, you just click the little drop down and you can see I have it on range right here. Okay. And then for the interval, okay, I just click the arrow next to the 500 and you have to scroll down to where ranges are. And these are all the range. Some of these were preset, some I added. But you can see I have 500 and I mostly bounce between about 200 and 500. Okay. So I don't use the shorter ones. I do use 20 for futures because in futures, I tend to day trade. So I need a smaller range in futures, right? So 20 ranges in futures is like 2 points. Okay. And so I need that shorter range because I'm generally getting in and out of trades the same day. A 50 is not going to help me if I'm looking to day trade futures. But Forex, I'd like to more swing and position trade these. I like to hold them for at least a couple of days. And so that's why I use a higher one. Okay. So again, on the left, we have 500. On the right, we've got 250. So this is the same chart. This is the Aussie New Zealand. Oh, no, actually, it's not. I need to change the one on the right to EuroCAD. So let's do that. All right. So here's the EuroCAD, both sides. This is 500 and this is 250. You can see if I click over on the right, this number changes to 250. Okay. So we're looking at the same thing. So essentially, this high right here on the right and all the way down here is this move right here on the left. Okay. So it's very similar to like if you were looking at a daily versus a 4 hour, right? It's that kind of, it's just drilling in for more detail. Okay. So Euro Canadian, I'm short. So I always start on the 500. Again, same thing, top down analysis type thing. Well, this is basically top down analysis. It's just not using time, it's using just price. Okay. There's no time component on these charts at all. Okay. So I'm currently short. I do have a take profit sitting um, down here. We had this move up and then this move up. Now I could target down at this larger swing low. A lot of times price not going to go get there. So I'm a little bit more conservative on that. And my take profit is sitting at this low down here. Now, if it gets down there and it looks like it wants to go low, I could always just trail stop, move my stop loss to somewhere above that, try to lock in some profits. And if it keeps running down, then great. But at least initially, this is where I'm targeting. And you can see we're heading down. Now, on the 250 chart, you can see this candle. This was put in, and this is a perfect example on the right of the fact that time is not an issue, is not a factor here. All right. So if we look over here, look at this candle right here on the right, this green candle. Now, this is the end of the day on Friday. Okay. From a time period. Okay. But look at the time stamp on this candle right here, this green bullish candle. This was at 9:30 a.m. on Friday. So that means the entire rest of the day on Friday. And remember, this is only a 250 chart or 25 pips. That means the entire rest of the day, the Euro Canadian did not move more than 25 pips, because if it had, it would have painted another candle, but it did not. Okay. And so just think about what that means. Think about all the noise that prevents. Okay. Okay. Now, obviously, if I lower this interval further, yes, I will see more detail and more candles. If I knock this down to 100, which is 10 pips, or down to 20, which is 2 pips, yes, you're going to see more. But at this setting right here, it did not paint another candle the entire rest of the day. So again, for me, that's going to be more like swing and position trading. I'm okay with that. This is not going to draw me in to do anything, because it painted, you know, an hour or so after the open on Friday, and it did nothing. Now, which is pretty typical for Fridays in the Forex market, especially in the summer. And if there was no real big news, nothing to drive it, very common. But it keeps you out of all that noise, all that chop, all those candles that are going to form on a shorter time frame. On the 4-hour chart, you're still going to have candles forming regardless. And it just makes your charts noisy. This is very clean. Okay. So what do I anticipate? Well, this, it went up here, and we'll see what it does. But ultimately, I think this will continue. I mean, we could get a pullback here on the 500 on the right, on the left here. Certainly, we could get a pullback. We could get a couple of green candles paint. But ultimately, I think this will continue lower, and hopefully we get down into this range. But I'll keep an eye on it. Okay. So on the Aussie yen, let me change to Aussie yen on both of these. Okay. So let's first look on the right. Okay. On the left. Sorry. We've got this strong move up, and notice this nice little consolidation area on the 500. This is a classic range for the range bars, right? And that's not why they call them range bars, but it does show consolidation areas really nicely. I mean, look at it. Got up into this range. Then we had 1, 2, 3, 4, 5 candles, basically forming a nice square, picture perfect range, essentially, that you could just say, all right, I'm not going to do anything as long as inside this range. Okay. And then here it breaks out, and you could have just gone long on the close of this candle. Or if we switch over to the 250 chart, here is that same range on the 250 chart right here. Okay. Here's that same range, just a little bit more detail, but it's showing you the same thing. Right. Showing you the same thing. And here you could have gone long on this candle, which, if you look over on the left, is about this level on this candle. So it would have gotten you in sooner. Okay. Would have gotten you in like basically on the left, like right here, instead of waiting for this one to close. So that's how you can combine the two time frames, right? So now remember, on the right, these are 25 pip candles, right? So how many do we have here? 1, 2, 3, 4, 5, 6. Then we had one pullback, 7, 8, 9, 10. So we went and one was a pullback, so 9. So 9 times 25 would be 10 would be 250. So 225 pips in this breakout from the close of this candle to the close of this one. All right, 225 pips. Now, maybe you exited down here. I'm just saying in a perfect world, 225 pips. Okay. And you got a better entry here on a break above this zone. Now, of course, you could have gone again to a shorter zone and maybe fine tune this even more. But I don't know how much better you're going to get because really, I'd want to wait for it to break above like this this lone wick right here. Okay. And it didn't do that until this candle, anyways. So I'm perfectly happy using the 250. I don't need to dig down even less into a shorter interval. So overall, I'm bullish and I see this setting up. And now I'm going to monitor the 250 and wait for a breakout of this zone and go take a long right here. Now, some of you might say, well, that's not a good risk to reward ratio because if you're putting your stop loss below the zone, now you've got risk from here all the way down here, as opposed to taking one of these candles and just putting your stop below the zone. And you would be absolutely correct if you wanted to do that. Now, you could have entered any one of these green candles, put your stop below here. Now, if you entered this one or this one, you would have had to have wait. Let's see the dates on this. This candle happened on July the 7th. Remember, the breakout didn't happen until July 14th. So from this candle to when it actually broke out was a full week, all right? A full calendar week. So now you would have been sitting on this trade in drawdown here or break even for 7 full days, right? At least 5 trading days, okay? And you would tie up your equity for nothing. Yes, you know. Now if you got into this one, then you look like a hero, right? Because after this one, it went straight up and broke through the range. But obviously, hindsight's 2020. You know, we wouldn't have known that at the moment. Okay. So you can do that as long as you're willing to, yes, your risk potentially is less, as long as you're willing to accept the fact that you could get into an extended sideways pattern and then you're going to just be tying up equity and hoping the trade eventually goes in your favor, which it did. And if you took it from here, let's say you took it at the close of this candle, okay, you waited for the close, then inside the range, you put your stop down here. Now you've got a 50 pip stop loss, and maybe you would have picked up an extra 25, 30 pips on this move up, okay? But to me, it doesn't matter. I'm happy with this. Then when I see this candle form right here on the right and to break out right here, I'd probably just putting my stop below, probably maybe not below that candle, but maybe below this one about halfway through the range. Give it a little breathing room. And so even at that point, I'm only looking at about a 30, 35 pip stop loss, which again, for someone like me who's not scalping, a 35 pip stop loss is nothing. Okay. That's like, you know, anything like 50 or less is I consider a good stop loss. Now, again, if you're a scalper, that's not good, right? But then again, if you're a scalper, you're not using intervals this long either. Okay. All right. So I told you I was short this pair. You're looking like, why are you short? Well, we'll see how this plays out. I do think this will go higher. If we look over here on the 250 now, we do have what I consider this little range right here. We were going up, we pulled back, went up, and then we broke this range. We got this little swing low right here on the 250. We came down here, we broke below it with this red candle, and then we came back with a green candle, swept, dropped this big wick, and then closed higher. And then, of course, this was Friday. Okay. So again, we really didn't do anything on Friday. This was Friday at 10:39 a.m. So the rest of the day, it did not do anything. It did not move more than 25 pips, or it was under 25 pips. So you had this one candle formed at 10:39. Nothing else happened the rest of the day. Okay. So I don't necessarily put a lot of weight into that. So let's see what happens. Now, if we come down here and we definitively take out this swing with like 1 or 2 candles below this zone, that would probably confirm prices going lower. But if we come down here, even if we throw a wick, as long as we don't get, a couple of big uh engulfing candles closing near their lows coming out of this zone, chances are this uptrend will continue once there's some volume in the market and so on. So I am short that right now. I probably will exit it tonight. You can see the spread is right now is 10.8, and I use Oanda on TradingView for my TradingView charts, and that is where my broker is, my personal broker anyway. So this is the spread I would be seeing with Oanda right now. So obviously, I'm not closing a position with a 10 pip spread. I'll wait for this to calm down in another hour or so. It'll probably drop to like 2.5, and then that's a more reasonable spread. All right. So that is the Aussie yen and the Euro CAD. We look at a couple more. Let's look at like Euro Aussie, something different. And we need to switch both of these. So again, I always start on the left here on the 500. What do we see with Euro Aussie? We see we have this new high was put in. The price has come all the way back down and it's tapped this zone. Does that mean it's going higher? I don't know. I mean, this is this is an old supply and demand thing, right? Price breaks out, comes all the way back, taps into quote supply, excuse me, demand down here, and then goes higher. I don't know if it will or not. But if we look over on the right at the 250 chart, here's that low that was put in, right? A clear liquidity sweep below this old low, right? Came down here, had this red candle close right at the low. The next one tried to go lower, closed higher with a wick, snapped back inside the range. But when it came back up, it also hit this little swing high right here and rejected off that. And then we had this Friday candle. This was at noon on Friday, and then it didn't move the rest of the day. Again, these are 25 pip candles right here. Didn't move the rest of the day. Overall, it looks fairly bullish. Yes, we had strong bearish momentum, but we've come back to a previous swing, and we do look like where we want to go higher. Personally, I would prefer to see the price come and take out this zone right here. I do have an alert sitting above the body of this bear candle right here. More conservatively would be above the wick here. But, if this comes up and tags this, then, maybe I'd be willing to look at a long position. And then over on the left here, I have one to the downside that basically takes out this liquidity down here, this candle at the bottom here. And if it can push down, it may take out this whole structure. Okay. So it's on my watch list. That's all it means. Okay. It doesn't mean I'll be taking a trade. We could end up just moving into a sideways pattern here, right? Where it just starts doing this. And I actually like those because once one of those is created, I just put a box around it and I just wait, right? I just wait and see how long that takes. And again, these are range candles. So that waiting time could be a day, it could be a week, whatever, I don't know. All right. So let's look at a couple more. We're going to go to Swiss yen. All right, here is Swiss yen. Okay, now this one's a little more messy, so we'll see. So let's first again we start on the left on our 500, and we've got multiple attempts at breaking this basically like 201.50 area right here, right? You talk about like round numbers and 50s. That's a pretty good area to look at. And, we have had 1, 2, 3, 4, now maybe 5 hits off that area. Price has bounced lower on all of them. Now, if we switch over to the right, here's that last hit. No, actually, this would be the last hit right here. This was on Friday again. This past Friday, this was at around 11 a.m. We put in this candle, and then we came back with another one. So if we could use a trend line here and just say, okay, well, maybe we got a lower high put in right here, and we start going lower. Okay. So you could say, well, if price goes back up here, breaks that wick on the 250, maybe I want to think about continuing a long trade, which probably would hopefully take out this whole range here. Or, you could take a short right now, put your stop above that candle, or you could wait to see if it actually breaks this structure right below here. What does it do when it comes down here? Does it hit this area and break through? And you could go short down there. Again, these are 25 pip candles. And this pair, the Swiss yen, when it's moving, can easily move 200 pips a day, 200 pips a day. So a 250 pip, excuse me, a couple of 25 pip candles here are very easy to form. Okay. So that's what I'm looking at, Swiss yen. Again, I'm not doing anything right now. It's kind of an ugly pair because it is overall moving sideways. But, what caught my eye is kind of this lower high right here. After multiple attempts to go higher, you can see right here we had a failed equal high. We had a little lower high that formed back here. And then look how far price dropped. Okay. We've kind of have that same thing set up again. I would say even more so with this one because look at the size of the wick. If price took a swing low here, tried to come up, failed. Okay. It's just simple support and resistance. Okay. So that's the Swiss yen. I've got 3, 7, I have 11 pairs on my watch list. Actually 10 because the Euro CAD, actually 9 because technically Euro CAD and Aussie yen I'm already in. So although Aussie yen, like I said, I probably will close at my open position and might get back into another one. I guess we can look at, let's look at pound US dollar. So I got to change it there and change it here. I haven't figured out if there's a way to get trading view to, if when I change one, it changes both of them, but doesn't matter. It's one click, so it's fine. Okay, so let's look at this. Okay, pound US dollar. Again, on the left, we've got the 500 range, so 50 pip candles here. And you can see my bias here is to the upside. Let's just take that off just to clean up the chart. And you can see we're coming up here. Then we've had this pullback. This pullback started on Wednesday last week. So remember, these are not time-based candles. So we had between Wednesday and Thursday, right? So this was Wednesday and Thursday. This was from about 1 p.m. on Wednesday until about almost 1 p.m. on Thursday. So this is about 24 hours. This moved 150 pips. But you can see, based on that, though, from 12:30 p.m. on Thursday all the way through the end of the day, Friday, this did not move more than 50 pips on this pair. So again, think about the noise that saves, okay? All the noise that you didn't get because there was not another candle painted. So if you're waiting for a long entry again, you wouldn't have to have really waited. I mean, you wouldn't have anything to really sit and fret over because it didn't paint. There was no buying going on here. Remember, it's the big traders, it's the big banks, hedge funds that move price. Okay. So clearly there were no buyers stepping in here because, again, the pound US dollar can move a lot of pips. A 50 pip move is nothing. I mean, look at this right here. I mean, this is 25, but all of these are 50s, right? 1, 2, 3, 4, 200 pips from 11:30 on Tuesday until 11 o'clock Wednesday. So in 24 hours, it moved 200 pips. Okay. So this pair can easily move 100, 150 pips a day. Okay. So now we jump over to the right side. And what do we have? Well, here's that up move. That's this right here, right? Because remember, these are 25 pip candles here. So here's that move that on the left started right here. Okay. And went up. That's this from right here, went up. Now we've come all the way back down. And now this candle painted at 8:40. Is that 8 or 6? No, at 6:41 a.m. on Friday. So even before the New York session, during kind of the mid-London session, this candle painted on Friday. And then again, this market did not move 25 pips the rest of the day on Friday. All right, think about that. On a pair like pound US dollar, that's saying something. Okay. We did get this one candle painted during the pre-New York session. Certainly you could go long right here and put a stop below this wick. Personally, what I'd love to see is another one come back with another strong one like this, closing at the highs. And to me, that might signal the resumption of the uptrend. And then I would maybe consider a long position then. Okay, again, it didn't happen on Friday, and I don't know if it'll happen during the overnight. I don't like trading the Asian session, especially non-Asian pairs. But, this is on my watch list. Does look like it wants to go higher. I do think it has some overhead room. It did come back to this old area right here. You can see on the 500, see this big wick? And you look over to the left, this little consolidation zone it dropped out of. But a lot of times these areas don't hold. These are kind of like retail trading areas, a lot of push and pull. There's no big money really in here. They eventually stepped in and pushed the price lower. So we'll see. If it starts to go higher, then at least I think it will come back towards these old highs up here would be a good target. So we'll see. So let's say we get along from, maybe the top of this candle and we come back up just to these old highs here. That would be 162 pips. That would be a nice trade. Okay. And you can hit that in like a day, or 2 days. All right. If the price is moving. All right. So that's pound US dollar. So my bias on it is long, just based on looking at this chart on the left. But, I don't know what it's going to do. If it comes down here and starts taking out these swing lows like this one and this one, well, obviously that will change my bias. But right now, just based on the structure, that's what it looks like to me. All right. And I guess we could look at one more about, what do we got here? Maybe New Zealand Canadian, kind of like a minor pair. So let's look at New Zealand CAD. Again, we start on the 500 and we look over here. Well, what do we have right for me right here? We've got a potential nice, well-defined zone setting up right here. Okay, I love these actually with range charts. Okay, I love these tight ranges. Now, I don't know how long it's going to move inside this zone. You can see I have an alert set above and below it. And I also did it on the 250 chart too. It's probably a little aggressive here on the downside one. Probably want to move that. Really, I could just leave these two because when these ranges are this well defined, then it's pretty easy to see. Now, this could go either way. Now we've got this sideways motion setting up on the 500, but let's see what it does because we could go sideways for a while and then pop through here, keep going. Although look to the left, we do have major swing highs sitting up here. So if it did pop out here and go long, I'd be very cautious about taking a long position. It's not all-time highs if I zoom out. You see, can be a really messy pair, lots of like wicks and stuff. So, a downside move to me would be preferred, just because I think there's more room for it to fall. But we'll see. So I've got these alerts set. We'll see what happens. So again, I don't know where it's going to go. But I really like these consolidation zones because they're very easy to see and they're very easy to like see when they've been broken. Now you do have to watch for liquidity sweeps, which is why I've said a couple of times what I like to see sometimes if it breaks below one of these zones, let's say you get a bear candle breaking down here, I like to see it come back with another one right after that, also closing lower, especially closing on the body lower. To me, that would be a great confirmation because sometimes you get one that'll close outside of the range, and then the very next one comes back green, engulfing back inside the range. And that sometimes means that move out of the range was really just a liquidity sweep and that price is actually going higher. And of course, the same thing could happen to the upside too. All right. So I do like to, kind of, you do have to use a little bit of judgment in terms of what price is actually doing. But this low right here on the right is the same as this wick. That's the same low. So, if we get a break below here, then I'd like to see a second candle on this 250 side, so 25 pip, because this pair doesn't move very much. So 225 pip candles, 50 pips is a lot. That's about all this pair generally moves in the course of a day for the most part. So if I get one and then a second one, that probably would take a day anyways. But then after that, I probably feel a little more comfortable with taking a short. And, we do have what is potentially a lower high right here that you can see very easily on the 250 chart. You got this little trend line drawn. Okay. So you get the hint, guys, right? This is just very simple. It's almost top down analysis, right? Only I'm not using time based candles, I'm using price based range candles. And I've got the longer one on the left, 50 pip candles, and I'm using the shorter one, 25 pip candles for a little bit more detail and potentially better, a little more precision entry and exit points on the right. Now, again, which intervals you use, again, as I said at the beginning, is going to depend on what type of trader you are and what time frames, how often you can be in front of your charts. The more time you have, the lower you could drop those numbers. But if you're like me, again, you like to swing and hold trades for a couple of days, then you want to use higher numbers. Okay. Now, whether I use 250 on the right for detail or 200 or even 150 or 100, completely up to you. I just feel the lower you go, yes, you're going to get a lot more detail, but you might start to see stuff that's not really there. So I prefer to keep it around 250. Once in a while, I will make it 200 and very once in a while, I'll drop to 100 and I'll look at that. But 250 for the most part is going to tell me what I need. Um, you know, for a pair like New Zealand Canadian that doesn't move very much, if I want a precise entry, maybe I do go lower because this pair doesn't move a ton, right? The average daily range on this thing is probably, you know, 50, 60 pips the entire day, right? So, maybe a 25 pip range candle is still too long, but if you're just using it in terms of just finding structure levels, I think it's fine. So there's a little bit of, science and a little bit of art that comes with all trading, but and this is no different. Okay. So yeah, so that is how that works, guys. And I wanted to I wanted to show everybody this kind of live and see what you think. So yeah, I hope that was helpful. Um, Obviously, this video will be posted in the live section of my channel, uh, but everybody wants to kind of see some live trading, so um, this is it. So that's how I do my analysis now, and like I said, I've got a couple of handfuls of pairs I'm watching this week, and we'll see what happens, right? And like I said, being on a watch list doesn't mean I'll take any of the trades, but I'm watching them. So, all right, guys. So I'm going to leave it there. I hope you have a good rest of the day. I'll be back, and we'll see if we get any entries on any of these. Obviously, won't be right now since we're only less than a half hour into market open, and things, Asian session, especially the first 2 hours, are you definitely want to avoid trading. Spreads are very wide during this time, and very low volume and liquidity at this time. So it's a good place to just sit and look. But I wouldn't enter or exit any trades based on anything I see right now. So this time of day. All right, but the market is open. So, all right, guys, take care. Have a good rest of your night, and I'll talk to everybody soon.